Morning everybody and welcome to today's morning market. So we're looking east to China, where this morning there have been unexpected interest rate cuts. And what is our take on this? Okay, so let's look at the details now. Earlier this morning, China announced cuts to its main lending rate and also cuts to the bank deposit rate. So just to give you those exact details, just on the 1-year lending rate, so the medium-term policy loans, they've dropped the rate on that by 0.2%. So that's at 2.3% now. And then the rate on 7-day loans was reduced to 1.7%. So what you've seen is the major state banks in China actually cut their deposit rates, and that's a way to relieve some pressure on their finances overall. That comes on the back of announcements earlier this week where the Chinese central bank cut several other of their lending rates. So for those of you that watch morning markets, Kevin Kidney went through that earlier this week. Now, I suppose the key question is, why is China actually doing this? What's the point? And China is cutting interest rates in order to stimulate the economy. So what have you seen with China over the past few years? And something that we've discussed a lot on morning markets, on podcasts, but China's actually struggled. And you've seen high youth unemployment. You've also seen the problems within the property sector overall. And I guess as well as that, you've also seen a lack of foreign investment. China obviously had zero COVID, a very, very rigid, very long-term COVID policy. And since then, you haven't really seen the level of foreign investment that you saw pre-COVID overall. So China is cutting interest rates to try and stimulate that economy. I guess, one of the things that I wanted to discuss was really what's our take on this. I think the first point is that it's quite interesting that China have cut interest rates ahead of the US central bank, so ahead of the Federal Reserve. And I think that's a good thing personally. And the reason why I think that's a good thing is because it illustrates the fact that China understands there are issues with the economy, but it also illustrates the fact that they're willing to do something to actually deal with it overall. And then I guess the key point is, what happens moving forward? Is this part of a major cutting cycle where we start to see interest rates cut down even further? We're not sure on that. We haven't had any guidance as of yet, but clearly that's something that we're monitoring as an investment team. So what else is going on in stock markets? A pretty tough time for equity markets at the moment, particularly in the US. Paul Durrans yesterday ran you through some of the big earnings releases, particularly Tesla, where you saw the Tesla share price come off quite significantly in after-hours trading. What you've seen is that the more technology-related sectors, so the ones that have done incredibly well so far this year, are starting to come off the boil just a little bit, and you've seen some marginal price falls come through overall. So look, that's everything from me today. I hope you enjoyed today's morning markets. I'm going to be back tomorrow with Joe Forward for the week in markets, where we give you the overall summary of the key things that we as a team have found particularly interesting overall. Thank you very much.